Okay, this is chapter 10, which is about long-term asset. For the short-term asset, it is on previous chapters. So the example of short-term assets are like cash, account receivable, inventory, and so on and so forth. So in this chapter, we're going to talk about long-term asset. So for long-term asset also, they have many types of long-term asset, such as PPE and also others intangible assets. So, but firstly, we're going to talk about PPE first. PPE or property, plant, equipment, they are tangible in nature. So tangible means the asset. We can see the asset. We can touch the asset. Okay, like it's a real thing. Okay, tangible means you can see and you can touch the thing, and then actively used in operations. So that asset you use in operation in every day. Okay, and then third one is expected to give you future benefit in a long-term periods. Okay, when we talk about long-term periods, means the asset will be used for more than 1 year, but usually more than 3 or 5 years. Okay. Okay, so when you buy a PPE, okay, property, plant, and equipment, when you buy them, it still looks new, and then I mean you can still use it, but at the end of the useful life, you need to dispose the asset. You need to remove, or eliminate, or or throw the asset away because you cannot use it anymore. You already used up, or maybe you do not want to use the asset anymore. You sell to people or you donate to people, but anyway, you're gonna dispose them. So from the date of buying the asset or the date of acquisition until the disposal time, okay, there is a declining in asset value. Okay, declining means like decreasing. Okay, so the value of the PPE will be lower if you use the asset longer. Okay. Okay, and then cost determination. How do you determine a cost of PPE? Okay, we call it as acquisition cost. So acquisition cost include the purchase price. Okay, the price when you buy the PPE. Okay, given by the buyer, given by the seller to you, and then all expenditure needed to prepare the asset for its intended use. So for example, you buy a machine, right? And then maybe the machine will come to your factory in parts, meaning that you need to assemble them in your factory. So the cost to assemble the transportation cost from from supplier to your factory, it's also included in the acquisition cost, and also the cost to assemble the machine in your factory also included in here. So yeah, all expenditure needed to prepare the asset for its intended use. Okay. And then we have land. So when you buy land, so this all the things are included in the cost of the land or the price of the land. The title, insurance, purchase price, and then surveying and taxes and so on and so on. But remember, okay, but remember, land is not depreciable. Okay, depreciable means the declining in value because of the time. But land is never depreciable because the price of land is always increasing, never be going down. So land is not depreciable. However, land improvements is depreciable. Land improvements means anything that you build on the land, such as parking lots, driveways, fences, walls, shrubs, and lighting systems. They are depreciable. Okay? I repeat, land is not depreciable, but land improvements are depreciable. And then we have buildings. For buildings, the cost of buildings include cost of purchase or construction, brokerage fees, taxes, attorney fees, and title fees. Okay, basically all the costs that you need to pay to build the building, and then and until and then all the costs included when you process when you construct the building, okay, or when you purchase the building, all the costs, okay. And then machinery and equipment, purchase price, installing, assembling, and testing, taxes, transportation charge, and insurance. Okay. This is depreciation. So depreciation is the process of allocating cost of an item of PPE to expense in the accounting periods benefiting from its use. Okay. So depreciation is the process to allocate part of asset that you already used um, during the accounting periods. Okay. So for when you buy the asset, you will record them in the statement of financial position. Okay. When you buy the asset, you will record them in the statement of financial position. Okay. But when you use the asset, okay, part of the asset that you already use, you will record in the income statement as the expense. Okay, so acquisition cost, so the asset that you still not use, you will record in the statement of financial position, but the asset that you already use, you will record them in the income statement as an expense. Okay.